Losing trade after trade after trade for almost 2 years. Back in 2016, I almost thought that I will quit trading. Suddenly, I found a strategy that showed me for the first time hope to stay in the market. That strategy for the first time made me profitable. Today, after almost 8 years of trading from 2014 till now, I developed many sophisticated strategy. But this one strategy that made me profitable, I still use this strategy as an added confluence in my trading. So in this video, I thought that I will share that strategy that for the first time made me profitable. I will share with you in detail what is this strategy and how you can use this strategy alone, or you can use this strategy as an added confluence in your existing trading strategy. Now the strategy that I'll show you today is RSI divergence trading strategy. This video will be very important for you, so make sure you stick till the end to see what is this strategy, how you can use this strategy with proper example. Before I begin, let me introduce myself. My name is Nazam. I'm a full-time trader, author, as well as founder of Forex Trading Wizard Academy. I'm Forex Wizard. The wizardry, including live trading strategies, educational content that you will find in this channel, will change the way you trade completely. With that being said, let's grab it. Okay traders, so before I begin the full strategy, make sure you subscribe, press that bell notification so that you don't miss out any of this, and also follow me on Instagram forex.wizard2021. First of all, let me explain what is RSI, and then we will know what is RSI divergence, and finally we will know how to apply RSI divergence strategy. So first, what is RSI? RSI stands for Relative Strength Index. So this is a momentum indicator which determines either a market is oversold or overbought. So first let me plot this indicator, then we'll see clearly what it is. So to do that, click on indicator section on the top of your chart. As soon as you click, you find this tab. Type here RSI. So as soon as you will type, you will find Relative Strength Index at the top of your chart. Click on it. As soon as you will click, you should see it at the bottom of your chart. So this is RSI, or Relative Strength Index. Now as you can see that there are three area in it. Double click on it, then you will see clearly. If you double click, then you should find this input tab. Now we will keep this value as default. So what this one is, first RSI length 14. So what does it mean? This is the how many period you will consider. This is the length of this period. So if you are using daily chart, that means that it will count 14 days data to in this indicator. So it will show you only for the value for this 14 days, past 14 days. If you use 4 hour, then 14 candle or 14 4 hour. If you use hourly chart, then 14 hours data it will consider. The rest of the thing will keep as it is. If you go to the style, then you will see the color and everything in this section. Now the main thing here, you see this is the RSI upper band is 70. So what it is you see there is a dotted line here. This is the RSI upper band. So RSI normally 100 to 0. Okay, so this is the full range of this indicator. So what does it mean? So if any market, according to RSI, if any market crosses the upper band, that means this 70, then it is considered as overbought market. On the other hand, if any market crosses 30, this is the below 30, then this market is considered as oversold. Okay, so now let me explain this indicator first. You see there are 3 zones in this indicator. Let me show you in a separate area so that you understand it clearly. You see there is an indicator like this, and there is one line here, one line here. Now, so this indicator basically count 100 here. Let me put the value. 70 here, okay, 30 here, and then 0 here. So if this indicator crosses this 70 value above, then this market is called as overbought market. On the other hand, if this indicator crosses this 30 value and comes 0, then this market is considered as oversold condition. So now let me show you here. You see this indicator here, this gray area, this is where the mean range. If the market crosses this dotted line, which is 70 RSI value, then this market is considered as oversold. Say for example here the market is overbought. Here is overbought, okay. And look at here, the bottom range, when it crosses the 30, then this market is considered as oversold. Now let's see what is RSI divergence. So let me clearly explain what is RSI divergence. Let's say a market, let me show you in a separate place to explain clearly. Let's say this is the chart, okay, the market is like this, and let's say, okay, this is the chart, and this is your momentum, the RSI indicator, okay, let's say like this. All right, now what you saw here, look at this here. In the chart, you saw that this is the top and the price slowly came down. So it has created lower high, right? From here, the price came down, went above, but created a lower high and then dropped. But in the RSI chart, if this point is top, but what you saw that RSI has created instead of lower high, RSI created a higher high. So when you see a disagreement between chart and indicator, that is called RSI divergence. Again, I am explaining, when you see a disagreement between the chart and in the momentum indicator, such as RSI indicator, that is called divergence. Now if it happens in RSI, that is called RSI divergence. Now let me show you in chart couple of examples, then we will see how we can apply this divergence as a strategy. Okay, so you will find millions of examples, okay. This is a very high probability trade setup, but make sure you use other confluence in your strategy to take the maximum advantage. Remember, no strategy in the world comes with 100% winning rate. So this strategy also doesn't come with 100% winning rate. It's a clear disclaimer. If you want to use this strategy, make sure you understand it properly. Do a lot of practice, backtest, and then use this strategy or use as an added confluence in your existing strategy. So first, look at this example. To clarify clearly chart and indicator, we will draw lines. So let's draw a line here. So this is USD CNH's daily chart, and let's draw a vertical line here. Okay, so what you see, look at this here. let me clear it, otherwise you can't see. Okay, see this top of the chart here, it's a clearly visible top, and this top is here. Okay, this is the first thing. All right, now look at this one here. What you see that the price after this top, the price came down, created couple of wave and started to move up, and then created another top. But look at the same point on RSI indicator. Once this price started to fall, RSI indicator also started to fall, right? Let me zoom in. Okay, RSI indicator also started to fall, and then when the price started to pick up, what you saw that RSI indicator slowly melting down, and finally in this point RSI indicator could not create any higher high. But in the chart, what you saw, the price has created a higher high. So let's connect this two line. Let me first delete this drawing. So let's connect these both lines, and then we'll see the divergence clearly. Let's connect this two top, and let's connect the two top on the indicator. So now you can see the clearly visible RSI divergence. What is the divergence? The price on the chart has created a higher high. On the indicator, it has created a lower high. So this is the clearly visible RSI divergence. Hopefully you got it. Let's see another example. So let's see this example on euro dollar in 15 minutes chart. Okay, so this is strategy works in any time frame, in any currency pairs. So let's see how we can apply this strategy. Now first look at this chart here. What you saw that starting from here, the price started to move up, right? Created a series of strongly bullish momentum, created a series of higher high and higher low. Every time the price was creating series of higher high and higher low, and moved here. So this is a clearly bullish move to the upside. Let's draw this point from here to here. What you saw, the price moved up. Okay, let's draw this one. Now look at the momentum or RSI indicator starting from here. Look at here. Once the price went up, the momentum indicator failed to create any higher high. Instead, it started to move down. Let's connect both line on the momentum indicator as well. So what you see, the price basically created lower high instead of higher high. So we see a clear divergence between the price and the indicator. So this is what we call an RSI divergence. Hopefully you clearly understood what is RSI divergence. If you still don't understand, then do a couple of example practice, watch this video a couple of times, and then try to find out in your chart. Remember, practice makes perfect. The more you will try to find out, the more your brain will be able to detect wherever there is divergence. Now let me explain the strategy that we will be using. Now we will not take any divergence. If we see a divergence in the middle, wherever, we will not take. In this strategy, we will consider only high probability divergence. To do that, we will consider only if RSI indicator is overbought or oversold. First condition. Second condition, there has to be a clearly defined divergence. Again, I'm explaining, you need at least two conditions to be fulfilled to apply this strategy. The first condition is RSI must be in overbought or oversold condition. Secondly, it has to have a clearly defined divergence. So when you see this two conditions fulfilled, then you trade. No, you will not trade still. You need another price action confirmation. Now this price action confirmation, you need to find out what you want. You want a hanging man, shooting star, bearish engulfer, bullish engulfer, doji, whatever. entry trigger you need. So you need three things. Firstly, the indicator has to be in overbought or oversold. Secondly, it has to have a divergence. Thirdly, you need to see a price action confirmation. If these three conditions align, then you can take a trade. Make sure you manage your risk, or you can use this as an added confirmation in your existing strategy. Now, first, let's see how we can apply this strategy in a couple of examples. Okay, traders, so let's see this example on GBP USD. So GBP USD is starting from here. We saw a strong downtrend, right? It's a clearly defined downtrending market, creating a series of lower high and lower low. The price came down here. Now after this, the price came and then started to move up. Okay, so in this down move, can you spot the divergence? I gave you 30 seconds. Yes, you are 100% right. There is a divergence in this zone. Okay, so let's see how this divergence happened. So starting from here, look at this here. What you see, this is the point, lowest point of this move, and then this is the same point in the chart in RSI. Okay, after this move, what you saw, the price retraced to the upside and then dropped here, but RSI failed to create. You saw there is a sharp move to the downside, created a new lower low, but for the same point, RSI failed to create new lower low. It's a clearly defined divergence. This is the one condition. Another important condition is this market is in oversold. So if you find any divergence in this zone, we will not consider. We will consider only when the price is in oversold or overbought, as we already discussed, and we have seen that the price in oversold, and also it has created a divergence. So let me show the divergence. So this is the downward move, the price dropped, but in the indicator, what we see, the price created a new higher low. So we saw a clearly defined divergence. When this divergence happens, then you need to wait for a entry trigger. Now entry trigger could be anything according to your strategy. We have our own entry trigger. It depends on how you trade, what you comfortable in trading. Do you comfortable in shooting star or bearish or bullish, whatever you like. But this is the whole concept, that you will find overbought or oversold condition, and then you look for divergence. This is a very, very high probability trade setup. Now let's see a couple of examples more. Okay, so let's see this one here. This is GBP Jpy Daily Chart. So we'll see in all kind of time frame. Now what you saw here, it's a clearly defined divergence. Look at here. This is the top of this move. It's an uptrend. After this move, we saw a sharp drop, and then price again pushed to the upside, created a new higher high. So let's connect both of this point. Now what you saw in the RSI indicator, that for the same point here, okay, and look at this here, what happened when the price created a new higher high, RSI failed to create higher high. Instead, it has created a lower high. Now why we have taken only this divergence? As I explained before, we will consider only when the RSI indicator is oversold or in overbought condition. As this condition is fulfilled only in this zone, so we have considered this divergence as a valid divergence according to our strategy. Now hopefully that you understood how this strategy is powerful. The rest remaining on you, how you will apply it, but you need to do back testing. You need to do a lot of practice so that your brain can grab the strategy. Let me show you one more example. So let me show you this example on Aussie dollar in 5 minutes chart. So what happened? Look at this here. there was a big move to the downside. Okay, downward move. The price came here and then went up for a retracement and came down again, created a new lower low. So let me draw this lower low. So we see a lower low in the chart, and then look at the same point on RSI indicator. It has created a sharp higher low. At the same time, this higher low is formed in an oversold condition in RSI indicator. So our both condition fulfilled, and after that what happened, look at this one here. The price sharply went up and created a new trend with a big move to the upside. Okay, we see a big move. So this is the power of RSI divergence. I sincerely believe that this video was helpful to you. If you find value in it, then don't forget to subscribe and also leave a comment below to help this idea to be visible to more people. Thank you for watching. See you soon in my next video.